What's up guys, you're welcome to FinLearn YouTube channel, and in this video I'm going to explain to you or guide you everything you need to know about how to do technical analysis. And if you are new to my YouTube channel, kindly subscribe and click the bell icon, and if you've already subscribed, kindly get a seat so you can enjoy this video. Alright, what do we mean by technical analysis? I'm going to say this very slow, so anybody that is brand new, it is going to be very easy for them to understand. What we mean by technical analysis is the study of historic price movements in order to make accurate trading decisions of what the market may do next. And when we are talking about technical analysis, every part of technical analysis is based around price. Let's take for example candlestick chart. It is just a visual representation of price itself. Alright, so having known the meaning of technical analysis, the next thing you should know is that what type of platform are you going to do your technical analysis on. And for this tutorial purpose, I'm using TradingView.com, and as you can see, so if you want to register on TradingView.com, kindly use my referral link under the description of this video. I'll take that as a thank you. Alright, when you've already logged into your TradingView platform, if you want to trade an asset, you have to select it first. If you don't know how to do that, check the playlist of my YouTube channel. Alright, and this is BTC USDT that I want to analyze or do my technical analysis on, and as you can see on my screen. But before you do that, there are some kind of instruments that you need to add in order to make your technical analysis very easy. So I'm going to start doing that one after the other. Maybe you should kind of take it slow around this side so you can see how I'm going to be adding them. You come here by your left, you start adding those instruments one after the other. The first thing we need to add is our cross. This is the cross, but you have to click this star button and add it to your favorite. So you click on it like this. As you can see, it has appeared on my screen. So this is not the only thing we are going to add. We still have to add more. We are going to need our trend line. You come here again, you click on that arrow, then you star the trend line so it can add it to your favorite. You can see we have two instruments here. We still need another one. We are going to need extended line, which is this one, so you add it to favorite also. So we are going to need up to maybe 10 instruments to make this analysis very simple. So let's go around and check again. So we are going to need Fibonacci retracement, so we had that one also, and we are also going to need trend-based Fibonacci extension. We are going to need that also, and we are going to need brush. So let's scroll down and check where they place brush in this. Okay, here it is. So this is brush, so I'll have to add it to favorite also. And the next thing is I'm going to need a rectangle. This is a rectangle, so I'll add it to favorite also. As you can see, the more I'm adding them, they keep on adding to my favorite list right here. So after that, I'm going to need the text. So I'll come here and add the text to my favorite also. As you can see, it's appear here, right? So the next thing is the callout. I need to add my callout. So callout should be under text. So this is callout. So I've already added the callout. So I'm going to need something else again. Let's look for it together. I'm looking for 1 to 5. Elliott 1 to 5. Alright. I'm going to need this Elliott impulsive wave. I'll add this also. And I'm going to need this Elliott correction wave also. I'll add it to the favorite. So the next thing I should add now is the price range. That's what we're going to use to know the upward movement or the down movement. That is the ranges of our price. So this is price range. You can also add date range also. I'm going to make this video kind of extended, so guys, kindly take your time to watch it till the end. So we are going to need another very important and crucial instrument. Also, that should be the forecasting instrument. It has to be around here. So we're going to need this. I'm going to need this long and short position. Alright, so for this video, these are the instruments that we are going to need to do our technical analysis and to make it more further. And if you can use this perfectly after watching this video, then you are a beginner to pro. And if you're already pro, then that's very good of you. Alright, now I already defined what we mean by technical analysis, and this video is going to cover what we know, what we mean by candlestick charts, to what we know as indicators, support and resistance, trends, entry patterns, and how to take stops and targets, and how to identify a trend in the market. Alright, having know that, let me now take you around this platform I'm using. So by your left here, this is the currency, this is the crypto. Like I'm under crypto right now. This is BTC USDT that I'm trading on. Heading over to the interval, we have the time frame here, which is 4-hour time frame. When you click on it, you can change it to the amount of time frame that you want. But one thing about time frame is that the shorter time frame you use, the lower amount of data you can capture in the price movement of an asset that you are trading. But I like to use a very long hour time frame so I can capture a lot of market movement. So you can also change it from this 4 hour to 1 day. So if I change it now, the chart is going to have a different look. As you can see, the chart have a very different look right now, right? So the next thing is the candlestick. So this candlestick, it visually represents the price, so you can change it to anything else. If I click on area now, it is going to change it, but don't use that. As a trader, you need to use candlestick. So as you can see, I've already added to my favorites. So the next one is the indicators. These indicators are just formulas or already made applications that you can use to aid your analysis. You can screenshot this formula and add it on your leisure time. Alright, without wasting much of your time. When you want to do your technical analysis, the first thing you should know or on how to do is how to read candlestick charts. And as you can see on your screen right here, we have two main types of candle. We have the red candle and we also have the green candle. So let me take you around the meaning or idea behind these two guys, that is the red candle and the green candle. Alright, this is a green candle, right? The green candle has a body. This part, this green part, we call it the body of the candle. And this down part, this is the wick of the candle, just like the conventional candle that we are using at home. So this is the wick part of the candle. It has a wick at the bottom and also has a wick at the upside. And for bullish candle, which is also known as the green candle, the green candle represents a day where price went higher or a day where the price close above where it opens. In case you don't understand that English, I'm going to use that when we get back to TradingView. Alright, now this is green candle. It represents a place or whenever the market is having an upward movement. And for you to know what is a green candle will open from the bottom like this. And as you can see, I've already labeled them. A green candle will open at the bottom here, then it will close at the up side here. So let's assume a time frame of 10 minutes. Let's assume a time frame of 10 minutes. Don't mind my handwriting, guys. Time frame of 10 minutes. So if a green candle open here in 10 minutes interval and it closes here, what will be the time that the candle is going to close? The candle will obviously close by 20. That is the interval between it will close by 20 minutes time frame because it opens here by 10 and it closes by 20. So for you to know green candlestick, it will open at the bottom and closes at the top. All right, going over to the wick. This is the wick of the candle. This wick represents the lowest point at which the price of the asset got into. That is why I label it as low. And it is the opposite of this one that we have here at high. This high represents the force at which the market pushes the value or the price of an asset. That is why we have this long wick here. That is the highest price, that is the highest part the price of the asset got into. So that's that about the green candle. Let's head over to the red candle. The red candle is just the opposite of the green candle that we just did now. So let's assume a 5 minute period for this red candlestick. You know, in green candlestick, it will open at the bottom and it will closes at the top. It will be the opposite here. So a red candle, it represents a red candlestick chart. It represents a day where price movement went lower, or it represents a day where price closed below where it opens. In case that English is not really familiar, I'm going to show it in the TradingView. So just watch this video till the end. And as you can see, this is red candle, right? This red candle will open here at the upper part. Let's assume a 5 minute period. A 5 minute period. Alright. If it opens here at 5 minute period, whenever you want to close, it will close by 10 because we are using 5 minute charts, 5 minute interval. And the wick is also the same, just like the green candlestick, because this wick is telling you that this is the lowest point at which the price of that particular asset you are trading gotten into, and the upper wick also represents the highest value at which the asset gotten into. So that's how I label all these candlestick. Let us now apply it to the real trading world. Let's go back to TradingView. I said something before that green candlestick represents a day where price went higher, or a day where the price closes above where it opened. This is what I'm saying. Let me move this instrument away. This is weak, and as you can see, I'm trading BTC right now. This is weak. I use that English that it closes above where it opens. I say that, let's go back to the chart again. This is a green candlestick, right? It opens at the bottom and closes at the top. So let's check it here. You can see that it opens here and it closes here. Let me zoom it properly, guys, so you can see. This small green candlestick opens here and it closes here. Another one opens here and closes here. That's why I use the definition that a green candlestick represents a day where the price went higher from here, 58,688 to 62,700, or the day where the price closes above where it opened. You know that when it open here, it closes here, and another green candlestick open where this one closes, another one open. That's why I use the English, and it's the same thing for this red candlestick chart, but it will be the opposite, because a red candlestick chart, it represents a day where the price went lower, or a day where the price closes below where it opens. I told you that. Let me show you the chart again. A red candlestick will open at the bottom and closes below, right? So when this red candlestick opens here, it closes here. That's why I use the definition that it represents a day where the price closes below where it's open. That's why we have this big candlestick here. It opens here and it closes here. All right, so that little explanation should guide you guys how to recognize what we mean by red candlestick chart and green candlestick chart. So having known that, the next thing you guys should learn on how to do when you are doing your technical analysis is how to uh, recognize support and resistance indicators and the rest. But all these instruments I added, we are still going to use them in the course of this video. But let me just take you around in all these instruments one after the other. This one that we have right here, this is the cross. For you to know what this one does, when you click on it like this and you apply it to your chart, this will allow you to see through the chart. That is the four corner. This is like a cross, right? As you can see, I'm dragging it around the chart. The next one is a trend line. You're going to need this when you want to draw a trend line, just like this, right? This is trend line. So let me delete this. The next one is the extended trend line. This particular extended trend line will go across your chart, as you can see. So for you to use this, you need to make your hand to be very, very stable. As you can see. All right, let me delete that. Delete it again. So the next one is the Fibonacci retracement and the trend-based Fibonacci retracement. I'm still coming to that. And the next one we have right here is the brush. You will need the brush whenever you're doing your analysis, and as you can see, I'm drawing it on my screen. The next one is the rectangle. Of course, you're going to need this. Maybe when you want to draw your support and resistance, you can also change the colors after drawing it. You can click on this pencil icon right here and change the color to anything you want. You can change it to green or anything, just like that. So the inner part of it, you can click on this and change the inner part of the candle. You can change it from green to red, and you can also change the opacity, that is the thickness or the transparency. So let me delete this box. The next one is the text. Maybe when you are analyzing and you don't want to forget anything, you can just click on the text and type whatever you want to remember in that particular area, so it can be more easier for you. You can also drag the text all around any way you want in your chart. So the next one is the call out. This is similar to text but with a more pointed arrow, and you type in wherever you want in it. All right, let me delete the call out also. And this Elliott impulsive wave, it is very crucial for you, but this Elliott impulsive wave is just 5 points. So when you start the first one here, so this is what this one does. It is just 5. You're still going to all other aspects of all these instruments. I'm just taking you guys all around it. So you've known the meaning of candlestick charts and how to recognize candlestick charts. But candlestick charts have a more deeper meaning. If you want to learn more course about the how to read candlestick charts further, kindly watch this video till the end. It is going to be long, but it is worth it. So the next thing I should explain to you is how to identify trending markets. So the trending markets, if I just want to say the meaning of trending markets has to do with the series of price that continually closes either higher or lower. For example, on an average over a given period of time. So if this kind of scenario can happen, then we can term it as a trending market. It can either be an upward trending market, and if we are talking about the upward trending market, we are saying that is the one that may be or may be fluctuating up and down, but on the average. What do I mean by all this stuff I just said? It is very simple now. Take a look at this chart right now. Let me use uptrend as an example first. I'm still going to downtrend. So uptrend is nothing more than higher highs, high low, low high, and low higher low. So what do I mean by that? Let me try to draw out something now so you guys can get what I'm trying to say. This right here that I just draw, this is what we know as uptrend, right? This kind of uptrend is easily can be identified by any kind of person that is into trading, whether pro or beginner. And if we have, how about if we have something like this? Let me draw another stuff. How about if we have something like this? And a little bit of consolidation at this point. This one that we have right here is what we call as consolidation. And the market gets itself back up and continue to make an upward movement just like it was before. So between this and this, which one can you say it is uptrend in the two? Well, I'm going to give you a very simple objective way to identify an uptrend. What we have in trending market is impulsive move. What do I mean by impulsive move? Impulsive move is just a big move that breaks into a new highs, and I mean high like this. Like if something is high, sorry about that. Why is this thing doing this? So the impulsive move is a big move that breaks into a new highs, and after impulsive move, the markets will actually take a breathing, and that breathing we call them pullback. I'm going to explain what do I mean by this impulsive move and pullback. The impulsive move, I'm going to label it as I, and the pullback, I'm going to label that as PB. Like P. Sorry about this. Let me try to use TradingView. Let me use the text option. This is what I'm saying, like impulsive move. Can you guys see that? So let me now delete it. Let me go back to the drawing phase. Alright, now this place that we have, right, I'm still going to show it on a real chart. I just have to draw it out first so it can be more easier to understand. This place that we have right here, this is the impulsive move. I'm going to label that one as I. This place right here, this is the impulsive move, and I say that after markets have an upward movement known as the impulsive move, and I define impulsive move as a new highs that break that is a big move that break into a new highs. That's what we know as impulsive move. And after that, this place that we have right here, this is the pullback, right? I will label that as PB, pullback. This thing is not drawing properly, but this place is the pullback. And after pullback, we also have another impulsive move. This is another impulsive move that we have right here, and after that we also have another pullback right here. This is the pullback. And all these stages right here, if you want to draw your chart, I'm still going to draw it on TradingView. I just want to draw it a bit. So now this place, this is our higher highs, HH. So this is our higher low, and from what I said before, uptrend is nothing more than higher highs, higher low, and low highs and lower highs. So this is higher low, this place right here. Alright, now I draw something here the other time that between this and this, how can you recognize which one is the uptrend? Actually, the two of them is uptrend, but for you to know actual uptrend, a pullback that precedes in an uptrend cannot be broken of the previous pullback. What do I mean by that? This is one pullback right here, right? This is another pullback. This is our impulsive move. This is impulsive move. This is our high, that is the H, followed by a higher low, which is also pullback. And after that, the market move upward here, which is higher high, that is HH, right? And there's another pullback here, which is higher low. This pullback right here, as you can see that it did not break. Sorry, let me redraw it. You see that it did not break below where it opens here. So far that we still maintain this upward movement and it doesn't break below this, we can still call that kind of market an upward movement on uptrend market. So, and as you can see, it continues to go from here till the market continues to have an upward movement here. So let me now show you in the real chart right here. So let's go to TradingView. How do you now draw your uptrend? Based on the instrument that we added the other time, we are going to need the trend line here. So that's what we are going to use to draw the trend line. So you start from the lowest point the market's gotten into. You can start from anywhere, but let me start from here. This is the lowest, or let me try to draw my mouse from here. Let me try to draw it from here. Alright, I've already picked the trend line. This is what I pick, guys. So when I pick on this, I'll start drawing this. Let me repick it. And as you can see, I only draw few parts of the trading or the trending markets right here. This place right here, this is our high. Let me bring the text instrument. Let me just type high and let me drag it here. This is our high. Let me try to zoom in properly. This is our high, also called an impulsive move. And after that, the market takes a breathing, that is, the market comes down a bit. And as you can see, even if the market comes down here, it doesn't break below this point, that is the starting point. I started to draw my trend line. This is what I was saying when I was drawing the chart in the sketch pad earlier. You see that it did not break below where it opens here. So this is our high. This will be our high lows. That's why I was saying the other time that high lows and low highs. So that's basically what uptrend is all about. These are our high lows. What will be the next thing? The next one will be the low high. The low high will be here. The low high will be here. This is the low high. This is the starting point, right? This is the impulsive move, and we have the pullback right here. Let me also label that as pullback. Alright, as you can see, the market continues to move from here, high to higher low, from low high that we have right here. From low high, what will be the next thing? It will be high low. This one will be HL. This one will be HL. So let me drag it. This is also the pullback, right? And after the pullback, we are still going to have another impulsive move. This is the next impulsive move. Let me draw that as I. Let me try to zoom in properly so the view can be more easier. So from the look of this little chart that we have right here, what can you see? The price of Bitcoin is actually moving from here, from high to higher low, from low high to higher low, and from high low to another big impulsive move, right? And from this, you can see that this is why I was using the extended line. This is, you can see that I have a cross on my chart. That is, it's showing me the 4 axis on the chart. So it is more easier for me. It will point out the 4 direction for me in the chart. So this is the starting point, right? The lowest low here doesn't break below the one we have here. Let me try to bring the rectangle. Let me try to bring out the rectangle. So let me drag it here. Can you see that this pullback doesn't break below the first trend line I started drawing here? And the next one also wouldn't break below this. Let me draw another rectangle. This time I'm going to make it more thinner. As you can see, so far that we still have this condition that is being met, we can still consider this kind of market as an upward market movement or an uptrend, because the lowest low doesn't break below the previous low. So that's how you're going to identify an uptrend. So having known the meaning of that, the next one I think I should explain is how to identify the um, downtrend, or the when the market is having a downward movement in the trading session. And in order to make your technical analysis be more robust and more reliable, so you've known how to identify the uptrend. How about the downtrend? So the downtrend will actually be the opposite of the uptrend. From uptrend right here, we start from high, right? So that will be the opposite. So let me go to the sketch pad right here. So now we have something like this. Let me redraw it. Alright, this can be easily be identified as a downtrend by anybody, right? But how about if markets do something funny that price normally does, just like this, just like this, like a little bit of consolidation right here, a little bit of consolidation right here, and it continues to make the normal downward movement. How can you now know if truly you are still in a downward movement? Or how about this? So the objective way just to identify if truly is also a downtrend is that, just like the opposite of uptrend, the lowest point here cannot be broken above where it opens. Just like here, this is the high, right? Let me delete that. And we have another one here. Another one is also here. And we also have another one here. And the price does something funny around this place. This is what we call consolidation. In as much as this place right here doesn't break above the previous high, then we still consider this type of market as a downward market movement. You can see that they are still at the same level. It doesn't break above it till the market starts having a downward movement again. All right, let me now show you the real chart. All right, for you to do that, you start to draw a downtrend. You start from the swing highest point in the market. So I'm going to start from this place that we have right here. I can use this trend line, or I can just use this Elios impulsive wave. But let me just use this Elios impulsive wave. So let me start from this week. Let me zoom in properly. Okay. Low, high, high, low. So now, from the look of this chart, you can see that this point right here, this first starting point of determining whether we are in downtrend right here, this is the high. From this high, we have the high low, and from this high low, we have the low high, and it doesn't break above this till the market started coming down upward. Sorry, the market started to have a more downward movement right here again, and I can continue to draw the chart all along across the chart right here. So let me show you the current price movement of Bitcoin. And as you can see, if I continue to draw the chart right now, this will actually lead me to somewhere around this side. And this is because this interval I'm using is just 4-hour time frame. It doesn't cover much in the data of the historic price of Bitcoin. But if I just click on this day and change it to 1 day, let's see how the chart is going to look like. Can you see that we have a more different look? Although the 3-hour time frame also capture a little bit of information, but since I changed it, the former analysis I did, the time frame actually render it very useless. Can you see that the time frame that you have to choose is very crucial if you want to do your technical analysis now? So all the previous drawing I just did here, I can easily erase it or go back to my previous time frame now. So if you just want to determine your downtrend, it's just the opposite of the uptrend. So For you to get the proper idea of this uptrend and downtrend, then you need to know what we mean by support and resistance. And I'm very sure that having, if we treat this support and resistance, you are going to you are going to understand this um uptrend and downtrend more further than this, because I know for being the first time it may look somehow to you and you may not be able to get it as a first timer, but once we treat support and resistance now, you're going to understand it, and that's what we're going to move into right now. So let me try to use another asset in order to make this support and resistance a bit more easier to understand for anybody that is very brand new to technical analysis. So let me change it from BTC, or let me look for another asset. Let me come here to Forex and let me use Euro to USD. Let's use that one. Alright, what do we mean by support and resistance? Support and resistance are simply markets or areas in the market that prices of an asset, whether Bitcoin, Euro to USD, stock, anything, that all those prices likely to react from. I use the word react. The react can be in two ways. I will explain. Let me take it again. Support and resistance, they are simply areas in the market that the price of an asset is likely to react from. And that word react, I'm going to explain it as I go further. Let me cut this. So now, support on its own, like I'm still going to draw. Let me put another tab for easy drawing. Let me delete all these ones that we have right here. Let me delete these ones. Okay. I want to erase the previous drawings. Alright, now let me go back to TradingView. Like, for it, you need to understand the difference between support and resistance. I'm going to say it in a layman's understanding so it can be more easy to understand. Support is an area in the market that price is likely to have a bounce up from the previous action or to be supported by. I'm going to demonstrate it by drawing some charts now. And for you to know what I meant by support is always at the bottom. Let me show you something now. Let me go to my sketch pad and draw something out. Let me come here. Alright, let me just draw a bullish market movement. I just want to simulate a bullish market movement. Alright, now this is how support used to look like. Support is always at the bottom. For you to draw your support, there are some conditions that will have to be met. I'm still coming to that. I just want to show you how support looks like. You're going to use a box in TradingView platform. So this is support now. Let me label it. I can use this to draw. Let me use text. me reduce the size a bit. So this is support now. Like from what I said earlier, support is just an area in the market that price is likely to have a bounce up. This is what I mean by bounce up. See that when price was here, it bounces from here and market started moving up. This chart, this is more of a candlestick. I'm still coming to TradingView to show you the real chart, but I just want to draw a sketch so it can be more easier for anybody to understand now. So now, this what I mean by bounce up. The price started here and it bounced up. The price of the asset started moving up. Now, the other one that I call resistance is just the opposite of support, but resistance is just an area in the market where price of an asset or crypto, stock, forex, anything that you're trading, that is the resistance is just an area in that market that you are trading that it price is likely to fall or drop down for that particular point. And these areas that I'm talking about, they are based on historic price and are based on other historic data also. Let me also draw something to explain that one too. Let me draw another chart. Okay. Let me move it away from here. Let me come here. Let me come here. Let me use a bullish example also. Alright, now let me pick my text to resistance. So now for you to draw your resistance, let me pick the pencil tool back. Now, if you see it like this, you feel like there's no difference between this and this, right? Alright, now, let's say the price started coming down from here. It touches this place and also goes and start coming down all over again. So this is how resistance is going to look like. This is resistance at the top and support will be at the bottom. Let me now combine them in one chart. So this is our support at the top. The resistance is going to be here. Like it is going to resist the force in the market. So that's resistance at the top and support will be at the bottom. It's just English. Support will be here. Let me pick my text. So anybody that is new should know the difference between support and resistance in doing technical analysis. It's very, very crucial. And that's why I just keep on emphasizing on it. It's not hard, it's very easy. It's not hard at all. Now, your resistance will be at the top and your support will be at the bottom. So I just use this little stuff to make it more easier to understand. And there are three things you need to know when you are using support and resistance. The first thing is that for support and resistance to be useful for you in doing your technical analysis, the first thing you should know is that The first useful part of technical analysis is that you are going to use it to spot possible reversals. I'm still coming to reversals. The second thing that support and resistance is using for you when doing technical analysis is you can use them as an entry point. That is when you want to enter into any market, you can easily use support and resistance to know whenever you want to enter into that particular market, to know when to enter and when not to. And the third thing that I use support and resistance for is that they are used to determine the stops and the targets in markets. What do I mean by stop and target? Stop simply means when you should halt the markets that you are trading, and target is when you should target, maybe when you should the target price or when you should target your take profit. So now let us now go to TradingView and show you how the real chart looks. And mind you, before you draw your support and resistance, it is very crucial for you to first of all draw your trend line. So that's what I'm going to do first now. Let me start drawing my trend line from low high. Don't forget this, I already did this previously. High low, also low high, this will be high low. Let me zoom it properly so anybody can see it clearly. This is low high. Let me stop at this point. I don't want it to be too complex. From the look of this chart now, you can see that the first thing I wanted to draw my support and resistance, but the first thing I have to do first is you draw your trend line, and you need to have adequate knowledge about the assets uh, that you want to trade in, and the best way to look for support and resistance in an uptrend. This is an uptrend. The market is moving upward at this particular point, right? So the best way for you to look for support and resistance in an uptrend is for you to look for previous level of resistance. Yes, you have to look for the previous level of resistance first. And that previous level of resistance, you need to make sure that that previous level of resistance was being broken. So once it has broken, then you are very confident in yourself that you can now use that previous level of resistance to become your support. And this has to be for the entry point model only. So now, what do I mean by what I just said now? I say that the best way for you to look for support and resistance in an uptrend is to look for previous level of resistance, right? Before I do it here, let me come here to sketchpad also. Like, I need to break this down very easy so anybody that is brand new will easily understand it. Let me delete this don't let me delete it, let me just leave it like this so it can be easily to understood. Alright, so let me draw another one here in an uptrend. Let me put a bit of consolidation right here. So now, I say that the best way to look for support and resistance in an uptrend is to look for the previous level of resistance. You know, resistance will be at the top, right? Okay, this will be the previous level of our resistance. Let me bring my text to. I'm going to use resistance as R. Let me just input R. Just input R. I don't want the board to be too messy. So this is resistance, right? You see that this is the previous level of resistance. Let me draw support at the bottom. Let me come here and draw support. Let me redraw it. Let me bring my text tool again. Support. So this is my support. So now, support I told you to be at the bottom in an uptrend, and resistance will be at the upper part of a chart. Resistance will be at the upper part of a chart in an uptrend, right? No, this is, let's assume this is what I was analyzing before. And when I draw my support and resistance, the chart broke it upward. When it broke it upward, you know it has rendered your analysis useless, right? Let me draw it upward again. You know that it has rendered your analysis useless again, because this is supposed to resist it, that it should come down in an uptrend for you, but it doesn't come down. The price of that particular asset goes up again, and this is a very good entry for you in an uptrend when market is moving up, right? So now that's why I say, I used to emphasize on it, that the best way for you to look for support and resistance in an uptrend, not bearish, not downtrend, in an uptrend, is to look for previous level of resistance. This is the previous level of resistance. This is the previous level. This is the previous level of resistance. This, and this previous level of resistance will now become this previous level of resistance that was broken here. It was broken here. This price broke it and it moves upward. So since it has broken like this in an uptrend, I will not let it to become and I will not let it to become my support. That is support that is supposed to be at the bottom here. I will not use this one again. I will now use this current resistance to become my support. That is, I will just delete this resistance right here. So this is my support right now. And if you use this kind of support, then you are using a very strong support, because there was resistance here before, and that resistance was very weak. You cannot predict the market data adequately, and it now broken. And when it's broke for you in an uptrend, then what is the market telling you? The market is telling you that the price of that asset is going to surge up. So that resistance is now going to become your support. That is, it is going to support this, that this price, oh, it will not come below this. It will either touch this line and continue to bounce up again. So that's how you are going to use the support and resistance in an uptrend market. Let me now go to TradingView to show you the real chart. Now I already drew my trend line, right? Sorry about that. Okay, I'm using a free account for this tutorial, so anybody that is even wanted to do technical analysis, even if they want to use free account or not, then it could be easier, because it won't be fair for me to be using premium account to do analysis, and anybody that wants to trade will be using free. It will be biased. All right, now to cut long story short, I already draw my trend line. So let's come to our chart here. I told you that support will be at the bottom, right? So what we did right here, let us now apply it in our trading view. Let's go to trading view. Let's draw our support here. So for you to draw your support, you come here to all your instruments that we have around here, Then you scroll to rectangle. So you click on rectangle. That's what you're going to use to draw your support. So you draw it very well. So you draw it very well. So when you draw it, make sure you release your mouse. You click on it to release it. So let me zoom in on it properly. Let me just hold the control key on your laptop. I want to make sure that it actually touches the wick. So as you can see, it touches the wick. So I'm good to go for this. Let me zoom out. So let me zoom out. Let me type on this. You can see this is what I'm drawing. It is not complex at all, very easy. So let me text on it. So anybody that's brand new, so this is my support. Let me move this text a bit. So this is my support. Now let's go to the sketch pad again. See, I already drew the support, right? The next one for us is to draw our resistance. And for you to draw your resistance, you have to look for the swing high. SWING. You look for the swing high the market has got into at that particular period. And based on the trend line I just drew, this is the highest or the swing high that the price has gotten into. That is the Euro USD I'm trading right now. So that's where I'm going to draw my resistance now. That is, the market has to resist from here. So now let me pick. You can modify this color of this support. Let me just change the color, or I can just leave the color, but let me change it to yellow. And I can change the opacity also. Let me just click on settings. Where's the opacity? It should be around here. So let me just remove that background. I don't want it to be too thick. You see, I already removed it now. It is not too messy on that chart. So now the next one is to draw our resistance, right? Just look for the swing guy and draw your resistance. I don't want this video to be too long. Come here to draw your resistance. So let me change the color. Change it to red. Let me change the border to yellow. And this is the opacity, the thickness. Let me change this background. Let me reduce the so now this is my support and this is my resistance. Let me remove this color at the same time. I don't like that color. It's too dark. So now this is my support and this is my resistance. Let me bring the test also, so anybody that's brand new will easily understand. Let me cut this off. Not now. So resistance will be here. And from the definition I gave about the support and resistance, this little stuff I just did just fulfill the meaning of that definition. If you still don't understand, just rewind the video back so it can be more easier to understand now. So this is support and this is resistance. So that's little stuff on you how to understand the support and resistance in an uptrend market. How about a bearish market, right? You may be wondering that I'm only doing for uptrend and not a downtrend. So for the bearish market now, I'm going to explain this one also really slowly. So anybody that is also brand new will also understand. So I already opened a new chart, a new sketch chart to understand this bearish market now. So this is for bullish. Let me just add the text. Bullish. Like bullish is when market is moving upward. That's the little English I can use to explain it. Or when the price of an asset is appreciating. Why this one I want to do now is bearish. This will be very easy to understand. This bearish is when price of market is losing value or it is coming down. And that's what we are going to talk about now. Okay, let me try to delete this. Right, let me drag it at the far top. Let me reduce the size. Okay, now let's start. We want to draw support and resistance for bearish market. That is when the price of an asset is coming down or dropping. Let me use the little English like that. Now for you to do that, like I said before, your trend line, you come here and pick this. You can see this is trend line. You pick it and you start drawing your trend line. You already know the objective way to draw the trend line. If you don't, kindly rewind the video back to when I was talking about trend line. So you start from low high. Let me zoom out properly. So I want to see the full chart. Low high, so high low, a pullback, and after pullback, low high, which is also impulsive move. Then after that, you know I'm drawing trend line for bearish market now that the price is falling down, right? So and after the impulsive move, that is a big move after a pullback. You already know pullback, right? So then after impulsive move, another pullback right here, another pullback. Let me call this off. Trying to draw everything before I even draw my support or resistance. So there's a pullback here. There's a pullback, and after that pullback, of course, there will be another impulsive move. Then let me stop that one there. right, let us hold it here. Like I said, I don't want the video to be too long. This was the previous one that we did. So you can see that obviously this candlestick chart, the price started falling down from all the way here to here that I stopped drawing the trend line. So in a bearish market, the chart is going to look something like this. But let me go to the sketch pad and draw something again before we come here and practicalize it in the real chart. But let me move this guys from here a bit. I don't want it to interfere with what I'm doing. Alright, so let's go to sketchpad. So in a bearish market, just like the heading here, bearish market, let me pick my pen. Let me use pencil. In a bearish market, a chart is going to look like this. Like this. Like this. A little bit of consolidation right here. Another consolidation right here also. So in a bearish market, market is going to look like this. If you see this, these are like candlestick charts. Like I'm just drawing now. If you see something like this now, just pick your box and draw your resistance at the top right here. So let me let my support resistance to be here. Alright. I'm going to label this as R, and my support will be here. Right. This place right here, this is the pullback. Don't forget, this is the pullback. You already know the meaning of pullback. A down movement after an impulsive move. That's the meaning of pullback. So now let me bring my text to, I want to text here again. I want to text resistance for R. Let me drag it away from here. Let me reduce the size first. So this is the resistance. Let me reduce it a bit. This is the resistance. I need the text again. And S for support. This is my support. And at this point, I'm having a pullback here. I don't need to label this. You already know this place as the pullback. So in a bearish market, what we are going to be looking for, I'm going to say this really slowly. In a bearish market now, what we are going to be looking for is for markets that you are trading. This is market. Is for it to get back up to the previous level of support. This is the previous level of support that I'm having. And after that, we are going to expect it to become resistance, just like something we did here in bullish market. So now, this support will be resistance. That is, this upper part is going to come here to the down part. It is going to become resistance, and this support will be below it again. Like it is going to move away from here because it is more weaker. It cannot predict more data in the market as at that moment because it has broken the analysis we are doing. Let me explain it more further. I said that in a bearish market, that is when the price of the asset is dropping. What we are looking for in a bearish market is for the market to get back up to from the previous level of structure support, that is this, and that we are going to expect it to become resistance. It is going to become resistance for us. That is, resistance, the market will bounce from here, come here again, and this support will be supporting it, it will not go beyond it. And if it goes beyond it, then this support is useless. It is going to become resistance for us, and this support here is no more useful here. It has become resistance. Then what will now happen? This support is coming down here, somewhere around here again, to become resistance. So now, and this strategy, we used to call it breaking retest strategy. And most importantly, when you are in a trending market, just look for the previous level of resistance that was broken, that is resistance at the top. So, and after that, you just wait for a big pullback, that is when the price comes down to become your support now. So now, this is not a trending market, this is bearish. I need to explain further before I started drawing again. So, and in this bearish market, we are just going to look for the level of support to break. This is the level of support here. This is my current support, right? And it has broken. What I mean by broken is that it's, let me bring the text. It's broke here. It's broke here. What I mean by broke is that the price crosses it downward, and since it has crosses it downward, then it is going to become my resistance as at that period. So let me now draw another one to back up what I'm saying. Okay, this is the former support, right? This is the former support, Abby. Resistance was here before. This is the former resistance. The pullback is here. This is the former support, this is the former resistance. And what I said, when it crosses it or break, that is the break, it's break down. This is in a bearish market when prices is coming down. When it's broke it like this, then this support is useless. It is going to become resistance for me now. So I will not label this as resistance support again. I will label it as resistance. It is going to become resistance for me. Then since resistance is always at the top, then I will now wait for that market. The market is coming here. This is another pullback here. So there's after that pullback, there's impulsive move here, and after impulsive move, there's a pullback. Then at this current price, that this asset is here, then I can now bring my support here to support the analysis I'm doing. I'm going to say this again. This is the previous level of resistance, like previous resistance, PR. This is, I use PR for previous resistance. This is previous resistance, right? And here, you know that this chart is what I'm mimicking here all over again. I just want to combine them all together before I go to the real deal in TradingView now. This is the previous level of resistance that I feel like the market should resist it. And this is my support before. Let me delete this. Let me delete it. I don't want it to be too complex. Let me delete this. Oh, that's too big. So I've already deleted that. Let me bring my pen. Was it pen I was using? It's pencil. So now, this was my support before, right? This, after my previous resistance, right? This was my support before. This is the support. I'm now bringing it here. This support now cannot support it again. Then in a bearish market, since it cannot support it again, it has broken from the definition I gave. Since it has broken down, then what will now happen to that support? It is going to become resistance. This is the current resistance I'm having now. Current resistance. Let me put that as CR. Current resistance I'm having now. This is the valid one now. This one is not valid again. So this is the current resistance I'm having now. This is the current resistance. Then what are you looking for again? Then you're looking for your support. Support will be at the bottom, don't forget, right? So this will be the support now. Then you're just going to label this as your support. It's nothing more than that. So this is the current resistance and this will be your support. And boom, the market will continue moving here, moving here. Then you can just head over to your TradingView and put your risk reward ratio somewhere around here. Let me go to TradingView. This is what risk reward ratio looks like. This, if you are taking long position, you select this. If you are taking short position, you select this. Let me click on it to show you how it looks like. So you can see it has opened directly for me, but let me delete it. So you just input your risk reward ratio around here. Let me also mimic the drawing here. Let me mimic the drawing of risk reward ratio here. Your stop loss will be here. Don't forget this is bearish market. The reason why your stop loss is here is that asset will not go beyond this. If it go beyond that, you're going to lose. And your take profits will be here, all this place. This is your take profit. If the asset keeps coming down based on your prediction, what you just have to do is you click on the buy button. Sorry, you click on the sell button that the asset is falling. It's going to fall. Then all this place, you are going to, based on the risk reward ratio you are using, maybe you are using 1:1 risk reward ratio. I already make a video on that. Check the playlist on this YouTube channel. So your take profits will be here. So let's now go into the real deal. Let's go to TradingView now. So I already drew my trend line, right? So the next thing for me to do now is to draw my support and resistance. So let's look at the chart again. You can see, just use the example I gave here to do this, right? This trend line, it goes off all the way from low high, a little bit of pullback, impulsive move, pullback, high low, impulsive move, low high, pullback, high low. That's how you're going to be using all this, right? So the next one, we draw our support and resistance, right? So this is where let me pick the rectangle again. This is where the chart ends. You can see this is where I draw my trend line. So I'm going to let the rectangle to end at that point also. So that's why this cross instrument I'm using is very, very important, guys. Okay. Let me hold my control key and check if this actually touches the wick. Let me adjust this trend line properly. You can see that they touches each other, right? You can see. So let me just move this box a bit. All right. all of them are in the same space now. So this is my resistance at the top. Let me bring the text tool also so it can be easier. Resistance. Mention the size to 16. Mention it for 28. Oh, it's too big. Mention it to 24. Okay, I think that's looking good. Let me change the color to make it more easier to see on the chart. So let me change the color. Just want to increase the opacity a bit. Let me come to settings here. Then this is the background. So let me change the opacity of the background. For you to change the opacity, long press on it with your left click. It is going to show up. So let me change how it looks. Like I don't want it to be too sharp. But let me use red color. Okay, this one looks right. Okay, I think I'm okay with this. Then I press OK. So that is my resistance, right? See how it looks like. So the next thing for me now is to draw my support, right? So let me bring the rectangle again. Come here. So this will be my support in a bearish market. Let me bring the text to support. Let me reduce the size a bit to 16. Like I don't need to be inputting all this text. I'm just doing it to be more easier to understand. This is the support and this is the resistance. And from what I said earlier, since this breaks this above, and when there's another market movement here, that is impulsive move. Let me zoom in. I draw the support here and it's broke above this support, but it doesn't reach this resistance or break above this resistance. Then that means that this my support is still useful. It's still within the middle of support and resistance. And after that impulsive move, that is the big move, upward movement, there's another pullback. This is the pullback. Let me bring paint. This is the pullback, right? Let me delete that. So this, after this pullback now, it now touches that support again. Then what are you expecting? Since it touches it, that's why we have this big red candle now. It touches it and it crosses here below. If you see this kind of thing in market, then what are you expecting again? You see big red candle. The first one, the second one, that's supposed to be your confirmation, right? Then you come here. These are the points that you have to enter into the trade, that is to place your order. You come here to put your forecasting information, that is the long or short. But we are analyzing short position, that is bearish market. You use this one short position. When you click on it, you put it here. It will do automatically for you. So this will be your risk reward ratio. You see that this down part is green, that is, I'm using risk reward ratio 1, right? This green part is when it's the profit you are going to be taking, and you see that the instrument is telling you the red here, that is, if the assets continue to move upward around all this place, all this red place. Let me use paint to do it. If markets continue to move in this direction and you are taking short position, that is, you are predicting the price of that asset is coming down, then you are running into loss. That's why you have to be very careful when you are using your risk to reward ratio. You can easily adjust it to minimize your loss by clicking on it. Let me delete this paint. So just for you to reduce your loss, click on this risk reward ratio by reducing it or dragging it. You can reduce it like this. You can see this is the your stop loss will be here, like this is where your stop loss is going to be 0.39%, and it will be 0.0049. That it is the your risk reward, right? And your take profit will be at the bottom here. You are using risk reward ratio 1 to 6.9 now, and the target price will be upward movement of 0.65, as you can see it's on this risk reward ratio, right? So before you place your order, after you have drawn your trend line, your support and resistance, and you know the market you are trading, then the next thing for you to execute your buy or short order, depending on the asset you are trading, or sorry, depending on the market trend you are trading, whether bearish. But for this example, I'm trading bearish market now. So the next thing that will be your judgment is your risk reward ratio. That will be the judgment for you to enter into that trade. And after you have input your risk reward ratio, your stop loss is here, like I said it before, and this green part, the down part, is where you are going to be taking your profit. So now when price is here at this point, it now comes down all the way down here. You know, remember, it's bearish market. If the asset keeps coming down, you are in profit, but if it keeps going up, you are in loss, because you are trading in bearish markets. That is, you are predicting that the asset is coming down, right? So if the asset keeps coming down all the way from here, 1.08 to 1.07, then you are making good profits based on your risk reward ratio. So now, and you're going to have upward movement of about few percent. How do you now check that percent? That is when you are going to use this instrument that I told you guys to add it previously in the beginning of this video. This price range, you click on this price range now. You can use it either direction, either up direction or down direction. What this is useful for is how are you going to know the loss or the upward movement by percentage and by increment in the market now. So let me delete this. Let's say I want to see how far it goes. This is for bullish. This is the when the asset is moving up. So if it moves from here to here, then I'm having 0.65%, the increment of 0.00693 euro to USD, because this is what I'm trading. And also for bearish, right, you come here to price range again, then you selected it also by dragging it downward. You can see it is going to tell you the level at which the market comes down with. That is the level the market comes down with. This is what this price range is telling you. This price range is telling me here that the market move up from here of 0.65%, and this, when I change the direction to bearish direction, it is telling me that the market, let me move it here, it is telling me that the market comes down to by 0.67%. So this is how you are going to draw your support and resistance and to make an accurate judgment in your trading. So with that being said, let's move to the next thing in our technical analysis journey. Let me delete this few stuff. Let me delete this. So that's that about support and resistance. We should move to another thing in our TradingView journey. That is technical analysis journey. If you're enjoying this video, remember to like this video and subscribe to my YouTube channel. So let's move to the next thing. And the next thing we are moving on to is indicators. I mean trading indicators. So trading indicators is very crucial for you when you want to do technical analysis in order to make a very good, accurate decision. So the term of trading indicators, what we mean by trading indicators is that trading indicators are just the formulas that are being created, and these formulas are being added to the current and historic price of an asset, whether crypto, stock, or forex. And they are also known as the mathematical equations. And all these mathematical equations, they are in order to plot lines and histogram on the chart that we are trading. So that's the meaning of trading indicators as it's related to doing technical analysis. And the main purpose of using technical indicators for trading is to simplify what price is doing. That is the current movement of price and the candlestick chart as a whole, just like this. Now, this candlestick chart. But there can be sometimes that candlestick charts can be confusing. So all those kind of time, that is when you are going to use trading indicators, as trading indicators are meant to clean up any kind of obstacles that you are facing during your trading journey or during your technical analysis sessions. And trading indicators is also good for anybody that is into trading, because it will provide a very good market movement or a good clarity on market conditions. And it can also is even useful to identify trend, just like this trend up, trend or down trend. And you can also use indicators as areas of values and also as entry points. That is when you are supposed to enter into markets. You can also use it as your stops or your targets. So the little explanation about trading indicators, I think, is okay at that point. So let us now go to trading indicators by applying it. Actually, we have thousands of indicators out there, but for this tutorial video, I'm going to use few of them. So you can just use the idea and focus more by adding more indicators when you started your own trading journey. So since you are using TradingView, you just come here at the top here. This is trading indicators and strategies. You click on it. So if you just wanted to add indicators for the first time, you just click on this search bar and search any indicators that you want. You can search ATR, anything. You can search any kind of indicator that you want. And for you to add it to your favorite, you just have to, let's say for example, ATR. Let's say you want to add this ATR, you click on it, it is added like that. And for you to add it to favorite, so you won't be bothering to search it next time, you just click on this star button. But I'm not using this indicator for this tutorial purpose. Let me remove it from my favorite and let me remove it from my chart. So let me head over to technical indicators back. So let me go to favorites. This is my favorites now. These are the list of indicators I've been using to trade. And I feel like it will be more easier for anybody that is brand new in trading or doing technical analysis in order to assist their trading journey. So we are having about 1, 2, 3, 4, 5, and 6. I'm having about 6 trading indicators now, and I'm going to treat all of these very fast and shortly in this tutorial video. This video is getting long already. So the first one is the EMA cross. For you to activate it, just click on it once, just like this. Alright, so you click on this and cut it. So the indicators is already showing on my chart, as you can see. You can see that these two lines is not here before, right? Let me delete one. I accidentally pressed 2. Okay. You can see that this line was not here before. Now let me now explain this EMA cross for you. The meaning of EMA is exponential moving average. And this indicator, I don't want to go more deeper on it, or else I will have been showing the formulas how they derive on it, but the video will be too long and it won't be easy to grab just like that. So now this indicator, if you want to use it, you have to make sure that you note these following things I want to say. The first thing is that one of these indicator is capturing long-term data and one of them is capturing short-term data. Let me now zoom out to show you guys what I'm talking about. The EMA 50 is capturing short-term data, while the EMA cross of 200 is capturing a very long-term data. Now let us go to the settings. You can adjust this indicator to anything that you want. You can also hide it by clicking on this eye icon. If I click on it, you will not see it again. You can also click on it back again. You can also do the settings around here by clicking on this settings or gearbox. So let me click on it. I'm not doing any settings. I just want to show you guys. So in case when you want to do your own, you can come here to styles. You can change the colors and anything. Just like you can even change the look of or how those lines look like. So now if I click on this color now, I can change the opacity, that is the thickness, how I want it to be thick, just like that. You can increase the opacity also. So the plot, that is what it will cross on it, just like when you are plotting a graph. You can increase the opacity also. So you can also change the color of the cross also, and the type of cross that you want, you can change it here. You can either use area or anything, but I like using the cross and leaving it just like that. So this is the visibility area, and just if you want to reset the settings, you can click here, and if you want to save it as the word, just click on that. So when you are done like this, you just click on OK. So now let me now go to explaining the little stuff about this indicator now. This indicator now, you can see that those two lines, they are intercepting each other, and when they intercept, this red line is for EMA cross 50. You can change the color to anything you want in your settings, but this red line is EMA 50, while this blue line is EMA 200. This blue line is covering a very long data movement, while this red line is covering short data movement. And this cross in between them, let me zoom in properly. Just hold your control key to zoom. Just hold your control key and drag your mouse. So now this plus right here, this is where the graph will plot itself. And when the graph plots itself, that is when there's a plus sign here, it is telling you that there is going to be a movement next, because when these two lines intercepted each other, something is about to happen, and it can be three things: either up movement or down movement or trending, that is it will just be going in a zigzag way, not too up, not too down. So now when they intercepted here, it's the graph plot for you, right? That is why we have this plot here, just like plotting your graph. And when it's intercepted, this EMA 50, the red EMA, have an upward movement. So when you see something like that, it is signaling for you that it is possible that the market will start having a good or upward movement. But what you just have to note is that you will check the rate at which it is moving up. Is it that high or not that high? And this blue line, you can see that it is also moving up but not that high, unlike this red. This is because it is capturing a very high data in the market. So let's go and look for the historic movement of this indicator now. Let me scroll back a bit. You can see at this point now, when these two lines, when they cross each other now, the red line moved up, and as at that point, the price of euro to USD also increased. That is why we have this, let me zoom in. That's why we have this big green candle. So the price moved from 1.06 all over to 1.07. That's a good movement. So they intercepted and they continue to maintain an upward movement here. So you can just draw your trend line here. Let me use Elliott impulsive wave. Let me just use the 5. Low high, high low, low high, high low. If you are using this indicator, don't only rely on indicators. You can just use them to assist you. Don't 100% rely on them, as that is like digging a graveyard if you're 100% relying on indicators. Remember, this video is only for educational purposes only. As you can see, when I drew my trend line, this is telling you that this indicator is very useful as at this point. So let me now delete this rectangle and the trend line. Let me delete them one after the other. So now, I think the little explanation about this EMA cross 50 to 100 should be taken just like that. And with that being said, let me now head over to another indicator that we are having. And mind you, I'm using free accounts for this tutorial purposes only, so I can't use multi-indicator at the same time. The highest I can use is adding up to 3 indicators. So I'm going to remove this indicator now. If you want to remove it, just come here and click on remove. Now see, it is no more showing on my chart. So let me go to the indicator section again and show another indicator next. So the next indicator that we are having is MACD, moving average convergence divergence. So this MACD, I don't want to go more deeper in it. It does a similar work to EMA cross 5200, but with a little bit of adding volume to them. You can see we have blue and pink line in this also, and it comes in handy with volume. This volume is telling you how the market or the price of that asset you are trading is doing. When these two lines also crosses here, there was a very low volume here. These are the volume. All these candlestick like, they are the volume. They are the volume. They can either be bullish or bearish. So when they intercepted each other at this point, so they start moving up. They wanted to intercept here, but they just collide, but did not intercept. But the market keeps going up. That's why we have all this small volume until when this blue line have a more upward movement, then the volume started having a very big volume. That is, the volume starts increasing size by size. So when you see, most of the time when I just see all this volume like 1, 2, 3 volume, and they are big volume, and these two lines have intercepted, that is, this blue line is showing a more higher upward movement, that is, the price is going to go higher. That is what that indicator is trying to tell you. So I may just feel like, wow, this indicator is telling me something nice. So I will now go and pick another indicator, just like the mark EMA cross I just used now. I want to use it as confirmation also. You can see this also is telling me here, assuming that as this one intercepted at this point, EMA also intercepted at this point, then I would have trust to enter at this point, but I won't enter trade at this point. I'll keep on going. Don't only use indicator to place your trade, just use them for confirmation. Draw your trend line, set your stop loss, and draw your support and resistance. You already know how to do support and resistance. If not, kindly rewind the video back. So now, and at this point, MACD is telling me the market is having an upward movement, while EMA cross is telling me that the market is also having a upward movement, but very, very low. So what do you now do at this point? That's when I'm going to use another indicator to explain on that one. Let me remove this EMA cross. Let me go back to indicators again. So that's when I'm going to use RSI. So RSI stands for Relative Strength Index. You can see that it almost looks like MACD, that is the Moving Average Convergence Divergence, but they are distinct and they do different way. I'm sorry that this chart is kind of looking too messy, but that is how it used to look like when you are trading. Alright, this is the RSI. This place I'm touching on my mouse. Let me zoom in a bit. You can see this is RSI. For you to set it, you can click on this to show it on or unshow it. But let me unshow this MACD. This is RSI. You can do any kind of settings on it by clicking on this gear icon, just like EMA cross I showed before. You can change the colors or anything and click on OK when you are done. But I'm not manipulating anything in this video. Before you manipulate indicators, make sure that you have adequate knowledge about them. If not, kindly use them as default. So this indicator now, you see that it has this RSI. It is used to test the strength index of the market you are trading. They also have line that is intercepting each other. Well, how do you now make judgment in using RSI? What do you use to make judgment? You come here at this point. You can see that we have some numbers right here. You can see that we have some numbers right here. The numbers start all below from 20. Oh, sorry. Let me zoom my chart properly. I want to show you guys something. Let me drag this. Okay. I just want to drag it properly. So now, how do you now make judgment in using RSI? When these two lines they intersected each other, whether uptrend or downtrend, there are some numbers here, and the numbers is starting from 30. Let me remove this thing again. It's blocking the view of my chart. Let me go and re-add it. So these are the numbers I'm talking about. This number is for relative strength index. This is the current market, this is the current movement that RSI is predicting for Euro to USD, right? They are yet to intercept each other now. How do you now say that I want to use this RSI to trade or to make an accurate judgment? What you will note is that whenever RSI is crossing below 30 RSI, these are the numbers. You can adjust them by dragging the mouse or decreasing them just like this, as you can see, just like this. But the highest of it is 100. This is the 100 at the top. Let me reduce it again so it can be more visible. Let me reduce it again. Can you guys see that? Alright. So let me now expand it back. This is where it started from 0. You can see the 0, right? So now, whenever RSI crosses, if RSI is having a downward movement just like this, you can see the movement is from here. So there is a bearish movement at this point. So it crosses below here. How do you now know the number it crosses below here? That's why you are going to need this cross. So when you place your mouse here, you look at the number of that RSI. This is around 50, right? It is coming down below 50. It comes down below 30 here. This is line of 30. Focus on this place. This is the number. Let me go back to the chart. It comes below here. So whenever RSI is coming below 30 or 40, then there's possible that the market will continue to have a more downward movement. But after that, you should know that it will be an impulsive move after that big pullback. You already know that. So now, after that pullback, you should know that there will be an impulsive move. That impulsive move is just like what RSI did here. That is, the market wanted to regain itself back by going upward here. That's when they were dragging each other here until when this purple line now go upward again. And when it started going up, if RSI can ever exceed 40 or 38, then you can accurately use it as a little judgment in doing your technical analysis. So this is the current movement of euro to USD, and this, they are just struggling. They are not even making an attempt to intercept each other at all, and they are below. This is around 49.42 RSI, which is still good, but the price of euro to USD is going to fall if these two guys can intercept each other. But that will be when the intercept, I'm going to know whether it is upward movement or downward movement. Then you're going to use the RSI number to judge. So let's go and take a look at the previous movement of this RSI. Can you see how they were being moving? Can you see how they were moving? This is what I'm talking about, impulsive move. RSI was here 30, it comes below 30. The price started falling. That's why we have all this red candle here. And after that pullback, what do you expect? They will drag each other here or have a trending, something like zigzag. And after pullback, what else are you expecting? Of course, impulsive move. That is a big move or a upward movement. Don't forget the meaning of impulsive move. That's why the RSI started predicting here also that the market will start moving up. So I don't want to go more further in explaining about RSI. So let's head over to the next indicator on the list. And the next one is the SD Boring Explosive Neville Sam by Neville Sam, sorry. So let me click on that. And so let me remove RSI so the chart won't be too messy. So what this indicator does for you, I don't want to explain more deeper on this. In this video, I have been explaining how to draw support and resistance, but this indicator will help you to draw your support and resistance without looking for swing high or swing low. As you can see, this indicator has already shown you the nearest support and resistance currently for the market. You can see these are the prediction of this indicator. You can just come here and pick your, let me call this off. You can just come here and pick your rectangle because that indicator is giving you a chance that this could be a good support or resistance. So you can just pick your rectangle and draw it. You can see that I'm not looking for any swing guy. It is the indicator that tells me, right? Then this is the next one it tells me. So how do you now know if this indicator is telling you the truth or not? That's when you have to apply your own proper knowledge of using this indicator. And if you are good in manipulating indicators, you can just head over to the settings of these indicators. This is the settings, the gear icon. You click on it and you do the little settings you feel like you know about. How do you now know if this indicator is telling you the truth or not? Just look at the previous movement of the indicator's prediction. You can see here it predicts that this will be the support and resistance will be here. So let's say when it was here, it gave me that my support should be here, and it tells me that my resistance should be here, right? And you head over by picking your trend line. Let me be fast with it. Low to high, high to low, and low to high here again. Let me just leave it there. I don't want to go more further. So now this indicator tell me that I should draw my support and resistance at this point. So now, and after this, it is not telling me anything again. And as you can see, the indicator is quite right, but this actually take a lot of time. As you can see, I'm dragging my mouse on it. The date and time is showing below here, this place. So let me drag it again. You can see the date and time is showing. So this indicator is quite telling the truth, but don't only rely on it. You can use it as entry or the confirmation of other indicators that you are using. So let me delete the rectangle and head over to the next indicators. Let me remove this. So the next one is the 3 moving average. This is more similar to EMA cross that I explained earlier, but with storylines. This storyline, I don't want to make this video too long. So this storyline, we have the green line here. This green line is the line that is capturing a very high market movement, and this green line is the 200 moving average. Yeah, this green line is the 200 moving average. You know we have 20, 50, and 200. This blue is 20. This red is 50. How do you know what I'm saying? Head over to settings. You're going to see it there. Moving average 1 EMA. You can see moving average by length. This is the length 20, right? And heading over to moving average 1. This is the close, this is the offset of it. They put the offset in 0. The moving average 2, which is the blue, which is the red line, is 50, right? And the last one, which is the green one that is here, it is the 200 moving average. So that is how I see it. It's not as if I'm saying it off it. You come here to styles. You can change the color of the MA1, MA2, or MA3 to anything. This green line that I say it's capturing a very long data, that is the moving average 200. I can change the color from green to anything that I want, and I can increase the opacity, that is the thickness. Let me try to change it to something else. Let me change it to this let me look for a more shinish color. Let me select this. So let me increase the opacity. And after that, what do? You just click on OK. So that's how you're going to change the settings on it. You can also change the figures, but you should know what you're doing before you do that. So this line here that I just changed the color, let me remove the color back. I don't really like that color. Let me change it back to green. Okay, this is looking more matured for a trader. Alright, this green line I told you is 200 EMA close. Sorry, it's 200 SMA close moving average. So it's capturing a very long term data. And this two, blue is for 20 and red is for 50. They also intercepted each other just like EMA 50 and 200. But this green line will be judged between the two of them. That is, it is going on its way. It doesn't interfere them, but it doesn't interfere with them. But you should know that if it is also moving, it is moving upward truly or downward truly, but at a very slow pace. So you can see that at this point, when this 200 EMA moving average was coming down, the price also started coming down. That's why we have all these candlesticks started falling at this point, as you can see on the chart. So that's how you're going to use this little 3 EMA close. I don't want to go more further on it. This is only beginner's guide video to doing technical analysis. So let me remove the indicators and go to the next indicator that we are having. The next indicator is trend line with bricks, and this one is from Lux Algo. They have a lot of indicators. You can check them out. This indicator is quite straightforward. You can see this indicator, it is going to plot your trend line for you. Like, you don't even need to plot any kind of trend line yourself. You can see this indicator started plotting the trend line from the swing high by drawing it here and dragging it from the swing low. It is drawing the trend line for you. Like, you don't need to pick this instrument and start drawing trend line for yourself again. This indicator is doing it for you. And after this indicator draw the trend line for you, it is also going to give you the buy or sell signal. That is, when it gives you this buy signal and it is in green color, it is telling you that the market is going to have a upward movement, and it plots it here. It starts from the highest wick. So it's giving you a buy signal here, which is green, right? And market started moving here. That's why we have this green candle. But don't rush yet when you see this. Wait for confirmation. That is, wait for some candlestick chart. It started moving here. It's after this impulsive move, there was a pullback here, and after that pullback, you should expect that you should enter into your trade. As I used to say, don't 100% rely on indicators. Just use them to assist your analysis. And as a trader, you don't only trade using indicators, just use them to assist you. And sometimes I doesn't use indicator to trade, but this video is only for educational purposes only. Use what works for you. So this indicator is going to give you the buy or sell signal. The two of them is BB, right? Is buy, but one is for sell and one is for short. This red is for sell, that is telling you that the market will have a down movement, while this green is for buy also, that is, it is telling you that the price of the asset will move upward. So you buy here and you sell here. This red B is sell. Market will come down. You can see when it tells you buy here, of course the market started dragging downward. So that's about how to use technical indicators. So let's head over to the next thing that we have in this tutorial video, and that will be candlestick pattern. Alright, and this candlestick pattern will be the last thing I'm going to treat in this video, so you guys should have a refreshing time in having your trading session. So what do we mean by candlestick pattern? I can just say that candlestick pattern is just a daily representation of different candlesticks, that is the red or green candle, bullish or bearish candle, and they represent four main things in the market. We use acronym of OHLC for them, that is, they represent market opening, market high, market low, and market close. That is OHLC. That's just the meaning of candlestick pattern. So let's go to the practical aspect of using what I mean by candlestick pattern. And as you all know, I like to draw first before I show you the real deal in the trading view. So let's head over to where we are drawing. Alright. Sorry guys. Oh, this video is kind of long. Just watch to the end. You're going to enjoy the trading. Okay. Now, candlestick pattern. Let me start with bullish candlestick pattern. Let me bring my text tool like I used to do. Let me choose fancy text. Let's start with candlestick bullish candle. Let me put another one here. Hammer. Let me put another one here too. This one is also hammer. Let me just reduce the size. Don't worry, I'm going to explain all this stuff I'm drawing. Oh, there's a typo here. Let me retype this. Bullish candle. Let me drag this one here. I just want to split the chart into two. Let me draw a overlying line between them. I want to split it into two. All right, let me bring this hammer here also. Okay, now, so the candlestick pattern, I'm going to explain two. One for bullish candle, that is when the market is having an upward movement, and the second one is the bearish candle, that is when the market is having a downward movement. So let me start with the bullish. That's what most traders like. They want market to keep moving up. So let me select pen. Let me draw a candle now. Candlestick. Don't worry, I'm still going to TradingView to show you and use the necessary instrument. Don't mind my drawing. So this is a bullish candle now, and this candle we call it hammer. Anyway you see this candle on your chart, it is a hammer candle. So this kind of candle now, when we get to TradingView, I'm going to use all those Fibonacci instruments I added during the beginning of this video now. So this instrument now, if you are using the Fibonacci, like this bullish candle, the body, this is the body of the candle. Do I need to type it down also? B stand for body. Let me put it, okay, I've not drawn down. This is the body of the candle. So when you use your Fibonacci instrument, and Fibonacci tells you that all this body of the candle is, if Fibonacci instrument tells you that this body of the candle is above 38.20% or 38.2%, that is the criteria, then you can take that candle as a valuable candle and you are going to count it as a very good candlestick chart that is telling you that there is a very high buying pressure, that is, market is going to do this, market is going to have an upward movement. So that's a buying pressure. I'm going to show you the Fibonacci instrument I'm going to use. Alright, so the same thing applies to the bearish candle. Let me draw the hammer for the bearish. Let me redraw it. Let me draw my candle. So the wick of this one will be up here. This is how it used to look like you're going to see it in the chart. This is how the hammer candle for bearish candle is going to look like, while the bullish candle for hammer is going to look like this. Look like this thing just looks like a hammer. This is like the handle. Like this place is like when you hold it, just like the conventional hammer. So this is the body of the candle. The same thing happen here. When you draw your Fibonacci, you start from the highest wick here for the bearish candle and you drag it downward. So if this body of the candle is still above 38.2%, then it is telling you a selling pressure is very high for that particular candlestick or the trade as of that period. So with that being said, let me now go to TradingView and show you how it looks like, so it will be more easier to spot it. So we are already in our TradingView, right? So let me remove all these our previous indicators, so the chart will not be looking too messy. Let me delete this trend line with breaks. Let me delete this box also. I have a lot to delete here, but let me just leave this ones. Alright, now this is the current market movement of this particular Euro to USD that we will be analyzing on. So now let's look for a hammer candle now. Let's look for it. Let me delete this away from here. Let me delete that, okay? Let's look for a good hammer candle that is going to tell you a buy or selling pressure. So now I've seen one here, and as you can see, we added all these instruments during the beginning of this video and we are going to use everything now. And the last two that we are yet to use is I think we are here to use 3. 1, 2. We've already used paint, just use it to highlight something. We are here to use this, and this trend angle. So let's start with the Fibonacci retracement now. So this is how you're going to use your Fibonacci retracement. When you click on it, so you want to measure this is the hammer candle. Let me zoom in properly. I've already spot a candle, but I'm yet to show if this candle is worth it for me. That is it going to be in line with the Fibonacci prediction now? So for you to draw your Fibonacci retracement in this bullish candle, that is green candle, you are going to start at the below here. For you to draw it, you start from the swing low of the wick of that candlestick. So let me zoom in properly so it can be more easier to see. So I'm going to start from here. This is the lowest wick. Assuming it's for red candle now, you're going to start from the up, but for green candle, you start from below. So you start from drawing it here till the wick. This is the end of the wick, right? I think this candlestick is making sense. Let me zoom in properly. Okay, and as you can see, this candlestick is the body of this candle here. You can see that it is below or in between, sorry, it is above 38.2%. So this is telling me that there's going to be a buying pressure as at the time of this candlestick is giving me this prediction, right? So this is how we are going to use this Fibonacci to make. And as you can see, when there was this prediction here, you see that the price started moving up here. That's why we have this big red candle. So this Fibonacci is a very good instrument for you when you are doing your technical analysis. So it tells you that there's going to be buying pressure here. And like I said before, when your candles, the body of your candlestick, the hammer for the bullish candle is above 38.20%, then the market is telling you a very high pressure that the market will go up. And see what happens here. The price started going up. That's why we have this big red candle. And you know, after impulsive move, what else are you expecting? Of course, the price will want to come down. That's why we have this pullback here. But actually, this prediction actually works out, right? So that's how you're going to use this Fibonacci for the bullish candle. How about if you want to use it for the bearish candle? That's what we just, oh, let me delete this. And that's what we're just going to do now. All right, now, so let me just let me zoom out properly. Let me look for another bearish hammer candle. So let me go back to the sketch part so you can see. So we've already fulfilled this. So it is remaining this now. So we're going to look for hammer that looks like this for bearish candle. And mind you, that will be red candle, right? Let me zoom out properly. Okay, let me check this. So I told you that when you want to draw your Fibonacci retracement for the bearish bullish candle, you're going to start from for the bullish candle, you're going to start from the bottom. And when you want to draw for this bearish candle, that is the red candle, this is the one I want to use, this particular one. Where's the paint icon? So this is the one I want to use now, this. So let me delete this paint. So when you want to do that, you start from the swing high upper part to draw the Fibonacci. So let me pick my Fibonacci retracement now. So when I click on it, you start from the swing high of the red candle stick to the lowest. Oh, I'm sorry. Let me redraw it. My mouse is getting too fast. Okay, let me pick the Fibonacci again. You start from the swing high, the wick, up to the low, the last part of the wick. And let me zoom in properly at this point. Okay, yeah. And as you can see, the body of this particular candle also is in between, like that is, it is below 38.2% Fibonacci prediction. So what this is telling you is that it is going to be a selling pressure at this point, and after that, that's why we have this big red candle here. So this Fibonacci is a good strategy in order for you to be doing your technical analysis. And to this, we should get to the end of the video. So if this video have helped you in order to do technical analysis, kindly subscribe to my YouTube channel, click the bell icon, like the video, comment your thoughts. If you still have any kind of issue, let me know in the comment section. I'm going to reply to that as fast as it is possible. So thank you guys for watching. See you in another video.